Hey guys, this is your host Nitin Binhani, and a very warm welcome to my startup podcast channel Jazair Audio, where we share real stories with real learnings.
In today's episode, we're unraveling the downfall of Trell, once a shining social commerce star that promised to revolutionize influencer-driven shopping but ultimately stumbled into crisis. We'll cover this story in 4 parts, from the meteoric rise, to rapid funding, to the storm of financial irregularities, the subsequent fallout, and company's latest pivot, followed by key lessons for founders. Part 1. The meteoric rise. Trell was founded in 2016 by a team of IIT Bombay and NITI alumni, namely Pulkit Agrawal, Bimal Karthi, Arun Lodi, and Prashant Sachan, who later exited in 2021 to start Apps for Bharat. The Bengaluru-based startup rode the post-TikTok ban wave, positioning itself as a regional, influencer-led social commerce platform. By August 2020, Trell had pivoted from a simple blogging site to a lifestyle-focused short video app, quickly layering on video commerce capabilities. Trell's traction was impressive. Trell garnered over 100 million downloads, 50 million monthly active users, and 20 billion monthly content views across 8 regional languages by mid of 2021. Part 2. Funding Frenzy. Trell collectively raised a total of $65.9 million in funding across 7 rounds. The last funding round was that of Rs 335 crore, or $45 million, Series B round in June 2021. The startup was backed by marquee investors like Mirai Asset, H&M Group, Samsung Ventures, Fosun, and many others who believed Trell could unlock micro-entrepreneurship in India's long-tail markets. With slush of cash, Trell doubled down on marketplace operations, onboarding over 500 personal care, beauty brands, and even planning enterprise AI/ML tools for Indian regional languages. The heavy mix of explosive user metrics, followed by investor enthusiasm, fostered overconfidence in the founders. They even secured a term sheet in December 2021 for a $100 million Series C at a $700 million valuation with Bestseller Group. This would have helped Trell leapfrog against competitors. Underneath, Trell was burning up to $5 million per month. Its runway now hinged on larger funding rounds, quite a risky game if Series C fell through, and it did. Part 3. The Storm Unleashed. Trell was caught in financial irregularities, fraud, and founders' personal gains. Here were the 5 key findings. A. EY probe and financial red flags. In March 2022, EY India kicked off a forensic audit of Trell's books, unearthing circular trading and merchant-like entities receiving cash advances of up to Rs 150 crore, or $18 million, to artificially inflate e-commerce sales. These findings sent shockwaves through the ecosystem and prompted investors to hit pause on new checks. B. Funding talks, collapse, and mass layoffs. As news of the audit broke, the $100 million Series C quickly evaporated. To conserve cash almost overnight, Trell laid off nearly half its workforce, or 300 employees, in March 2022. By end of 2022, the employees' strength further plunged to just 47. C. Unpaid influencers and talent exodus. Meanwhile, content creators were not paid for 6 to 7 months, and over 100 influencers publicly cried foul on payments, sharing screenshots of deleted payment reminder comments on Trell's Instagram account. Another 100 employees voluntarily left or were laid off amid the turmoil, eroding trust. D. High-profile investor exits. Sequoia Capital, once an early cheerleader, quietly exited in mid-2022, offloading its 5.23% stake to Marisys Advisors for roughly $500,000. A steep 78% loss on its $2.25 million investment. This exit underscored the investor's loss of faith and the dangers of no follow-on funding. E. The financial fallout. Trell's FY 2022 numbers shared rest of the story. It reported revenues of rupees 144 crore, or $17 million, against the losses of rupees 268 crore, or $31.6 million, fueled by soaring employee expenses. Total costs quadrupled to rupees 413 crore, or $48.7 million, while operational revenue growth couldn't match runway. With just rupees 25 crore, or $3 million in the bank, Trell found itself with shattered runway, valuation, and eroded credibility amongst the investors. Part 4. A new beginning, i.e., pivot to enterprise software. A year after the audit, whispers emerged of a quiet pivot to enterprise software. The startup was reportedly building a tool to compress videos and images, thereby helping companies slash the server costs while ensuring enterprise-grade security. Current and former employees describe this as a lights-on mode for video commerce. However, the new product's role in Trell's roadmap still remains unclear. Co-founder Pulkit Agrawal publicly denies any strategic pivot, reaffirming commitment to social commerce and ad revenue streams. We are deeply committed and focused on Trell's existing business model. We categorically deny all other claims. Internally, though the debate rages, spin out a separate unit, subsume the tech in-house, or seek an outright acquisition from partners like Samsung or H&M, both being longtime investors. With fresh VC checks unlikely, survival may hinge on carving a sustainable, asset-light niche or finding a strategic buyer. Finally, lessons for the founders. Here are the 5 key takeaways from the Trell saga. 1. Mind the burn, not just the buzz. Rapid user growth excites investors, but without disciplined runway management, even the best-funded startups can crash when funding dries up. 2. Governance and transparency matter. Proactive financial controls and robust board oversight are non-negotiable. An external audit shouldn't come as a surprise, it should be mandatory. 3. Prioritize core competency. Frequent pivots can dilute focus. Ensure each strategic shift aligns with your team's expertise and your market's needs. 4. Honor commitments to your tribe. Creators and employees are your ecosystem. Delayed payments or mass layoffs damages trust, making recovery nearly impossible. 5. Plan for Plan B early. Always have contingency strategies, be it cost reduction levers, alternative revenue streams, or M&A roadmaps. Plan B is necessary to weather sudden funding shocks. Trell's story is a cautionary tale of how growth at all costs can spiral into unsustainable business model. For founders charting their startup journeys, remember, sustainable, profitable scaling, transparent corporate governance, and community trust are the bedrock of building enduring ventures. Folks, that's it for today. Thanks for tuning in. Please like, comment, and subscribe to the channel. Join us next time as we continue exploring the dynamic world of startups and the valuable lessons from their journeys.